One of the most important steps in planning for retirement is to estimate how much money you will need to live comfortably and pursue your goals. There is no one-size-fits-all answer to this question, as different factors such as your age, income, lifestyle, and life expectancy will affect your retirement needs. However, there are some general guidelines and tools that can help you calculate a ballpark figure for your retirement savings. The first thing you need to do is to estimate your annual expenses in retirement. This includes essential costs such as housing, food, healthcare, utilities, and taxes, as well as discretionary spending on things like travel, entertainment, hobbies, and gifts. You can use your current budget as a starting point, but keep in mind that some expenses may change or disappear in retirement, while others may increase or emerge. For example, you may spend less on commuting and clothing, but more on leisure and medical care. You may also have to factor in inflation, which erodes the purchasing power of your money over time. The next thing you need to do is to estimate your annual income in retirement. This includes sources such as Social Security benefits, pensions, annuities, rental income, and part-time work. You can use online calculators or statements from your providers to get an idea of how much you can expect to receive from these sources. You should also consider the timing and taxation of your income streams, as they may affect your cash flow and tax bracket in retirement. The difference between your annual expenses and income is the amount you need to cover from your retirement savings each year. To calculate how much you need to save for retirement based on this amount, you need to make some assumptions about your investment returns, withdrawal rate, and lifespan. A common rule of thumb is to use the 4% rule, which states that you can withdraw 4% of your portfolio in the first year of retirement and adjust it for inflation in subsequent years without running out of money for at least 30 years. However, this rule may not be suitable for everyone, as it depends on factors such as your asset allocation, market conditions, and personal preferences. You may want to use a more conservative or aggressive withdrawal rate depending on your risk tolerance and goals. To illustrate how this works, let's say you estimate that you need $40,000 a year from your retirement savings to cover your expenses after accounting for your income sources. Using the 4% rule, you can divide this amount by 0.04 to get the size of your portfolio at retirement. In this case, that would be $1 million. This means that you need to save $1 million by the time you retire to sustain your desired lifestyle. Of course, this is a simplified example that does not take into account many variables that may affect your retirement planning. To get a more accurate and personalized estimate of how much you need to save for retirement based on your age, income, and lifestyle goals, you should consult a financial planner or use a comprehensive retirement calculator that can account for factors such as taxes, inflation, healthcare costs, Social Security benefits, and market fluctuations. By doing so, you can have a clearer picture of where you stand and what steps you need to take to achieve your retirement dreams. One of the key factors that determines how much you can save for retirement is your savings rate. This is the percentage of your income that you put aside for your future. The higher your savings rate, the faster you can grow your retirement nest egg and the sooner you can achieve financial independence. But how can you increase your savings rate without sacrificing your quality of life? There are two main strategies: reducing your expenses and increasing your income. Let's look at each one in more detail. Reducing your expenses means finding ways to spend less on the things that are not essential or important to you. This can free up more money for the things that are, such as saving for retirement. Here are some examples of how you can reduce your expenses, track your spending, and create a budget. This can help you identify where your money is going and where you can cut back. You can use apps, spreadsheets, or pen and paper to do this. Review your recurring bills and subscriptions. See if you can negotiate lower rates, switch to cheaper plans, or cancel services that you don't use or need. Save on housing costs. Housing is often the biggest expense for most people. You can save money by downsizing to a smaller home, refinancing your mortgage, renting out a room, or moving to a lower-cost area. Save on transportation costs. Transportation is another major expense for many people. You can save money by driving less, using public transit, biking, walking, carpooling, or buying a more fuel-efficient vehicle. Save on food costs. Food is another big expense that can be reduced with some planning and creativity. You can save money by cooking at home more often, planning your meals ahead, shopping with a list, buying in bulk, using coupons, or growing your own food. Save on entertainment and leisure costs. Entertainment and leisure are important for your well-being, but they don't have to be expensive. You can save money by finding free or low-cost activities in your area, using the library, borrowing or swapping books and movies, or taking advantage of discounts and deals. Increasing your income means finding ways to earn more money from your work or other sources. This can boost your savings rate and help you reach your retirement goals faster. Here are some examples of how you can increase your income. Ask for a raise or promotion. If you are still working, one of the simplest ways to increase your income is to ask for more money from your employer. You can do this by demonstrating your value, skills, and achievements, and by researching the market rate for your position. Look for a new job or career. If you are not satisfied with your current job or income, you can look for a new opportunity that pays better or suits your interests more. You can do this by updating your resume, networking with people in your field, or learning new skills. Start a side hustle or business. If you have a hobby, passion, or talent that you can monetize, you can start a side hustle or business that generates extra income. You can do this by selling your products or services online or offline, creating a website or blog, or joining a platform like Uber or Airbnb. Work part-time or freelance in retirement. If you are already retired or planning to retire soon, you can still earn some income by working part-time or freelance in something that you enjoy or are good at. You can do this by finding flexible jobs online or in your community, consulting for former employers or clients, or teaching or tutoring others. Make money from your assets. If you have assets that you don't use or need, you can make money from them by renting them out, selling them, or investing them. You can do this by listing your space, car, equipment, or other items on platforms like VRBO or Turo, selling your unwanted stuff on eBay or Craigslist, or investing your money in stocks, bonds, real estate, or other vehicles. By following these strategies to reduce your expenses and increase your income, you can boost your savings rate and build a bigger retirement fund. This will help you strike a balance between saving for the future and enjoying the present. Retirement planning can be a source of stress and anxiety for many people. You may worry about having enough money to live comfortably, losing your identity and purpose, or feeling bored and isolated without your work. However, there are ways to manage these negative emotions and enjoy your present life while preparing for your future. One way to cope with stress and anxiety related to retirement planning is to embrace change and be flexible. Retirement is a major life transition that requires adjusting to a new lifestyle and identity. Instead of resisting or fearing the change, try to see it as an opportunity to explore new interests, hobbies, and activities. You can also use this time to reconnect with your family, friends, and community, or make new social connections that share your passions. Another way to manage stress and anxiety related to retirement planning is to find new purpose and meaning in your life. Work may have given you a sense of accomplishment, contribution, and recognition, but you can still find other ways to fulfill these needs after you retire. For example, you can volunteer for a cause that matters to you, mentor younger people in your field, start a small business or a side hustle, or pursue a lifelong dream or goal. A third way to manage stress and anxiety related to retirement planning is to look after your health. Retirement can affect your physical and mental well-being in various ways. For instance, you may experience changes in your sleep patterns, appetite, energy levels, mood, or cognitive abilities. To prevent or reduce these effects, it is important to maintain a healthy lifestyle that includes regular exercise, balanced nutrition, adequate hydration, stress management techniques, and social support. You may also want to consult your doctor or a therapist if you have any health concerns or symptoms of depression or anxiety. By following these tips, you can reduce the stress and anxiety related to retirement planning and enjoy your present life more. Remember that retirement is not an end but a new beginning that offers many possibilities for growth, happiness, and fulfillment.